Hey guys, so Warren Buffett has this famous line, and if you've watched my channel in previous videos, you know I use this quote a lot. But I'm a value investor. He's an idol of mine, and I take what he says very seriously. So on with the quote: "It's better to buy a wonderful company at a fair price than a fair company at a wonderful price." Now, why? Because truly great businesses, like ones with killer advantages, strong management, steady growth, tend to keep getting more valuable and valuable year after year. Even if you don't get a screaming deal, huge discount undervalued up front, the quality compounds like crazy over time and usually makes you way more money. But those average or struggling companies, even if they're dirt cheap, they often stay mediocre or get worse. Competition eats them, profits stall, and your bargain turns into a money pit. So chase quality first, and that's exactly why I want to talk about Microsoft today. When you take a look at Microsoft, I mean, it's a classic, wonderful company here. I mean, massive moat with Windows, Azure cloud dominance now, Office suite, AI leadership, steady growth, and killer cash flows that keep compounding. I mean, Warren Buffett's quote absolutely nails it here. I mean, right now, Microsoft's trading at a price to operating cash flow of about 23 times. It historically has traded in around the 26 to 27 times. So, it's not a screaming undervalued, but, again, back to that point, it's a great company at a fair price right now. It's in my opinion, it's better than chasing mediocre companies at rock bottom bargain because Microsoft's quality means those cash flows should keeps growing strong for years. So when I wanted to look at it in context of Google, Microsoft, Oracle, Apple, and Amazon, some of the Mag Seven, I didn't include Tesla, Nvidia because their price operating cash flow multiples are so high it distorts this image, but they're both well above it. And it's awesome that Microsoft, in my opinion, right? They're this blue line at 19 and a half times. Only Amazon's trading below that. And I'm sure all of you have been hearing the sounding of the horn about buying Amazon now, right? And it's trading at one of the lowest multiples. Only sank it only to Amazon here. And this setup historically is a killer buying opportunity for a company like Microsoft. And when the absolute best business with a huge moat in cloud, AI, software, endless cash flow is trading at a fair price, especially when compared to the rest of the Mag Seven, I mean, it's usually going to outperform over time. And again, just coming back to that Buffett quote, it just nails it. It's a wonderful company truly trading at a fair price. Now, I think a lot of the stock, if you take a look here, load up the overview page here and pull up the stock chart. If you take a look at the 1 year chart, maybe I'll just show you the max chart to really show you. You can see this little drawdown. You can see after every drawdown, it's shot back up since the history of the stock. It's about as much technical analysis as I do here. I'm a valuation guy. But I think a lot of these fears have been drawn around their significant investment in OpenAI. They own almost 30% of the company. And there are a lot of fears about OpenAI now, not being solvent. They don't have this revenue generation. They're burning through cash. They have countless partnerships. And now the Gemini model is ahead of ChatGPT. And, Google has a lot of cash flows to live off of, unlike OpenAI. But in my opinion, going back here to the OpenAI Microsoft deal, I think it's super bullish for Microsoft. And like again, I know I've talked about this on the channel. I'm not into investing in like Red Cat or AST Space Mobile or these whatever's the hot nuclear modular power plant stock. Like I'm not into these pre-revenue. I'm into skewed risk reward, a company that has demonstrated time and time again for decades that they are a dominant player and excellent allocators of capital in this downtrot. But ChatGPT can I think they can come back around, just like Gemini edged ahead. I think ChatGPT can too. I mean, this isn't, just because Gemini's ahead of them now doesn't mean always and forever. And that's why I like this, asymmetric risk. I think there's more reward than risk here in this scenario. But Microsoft, with their deal with OpenAI, they basically get to own the keys to the hottest AI tech, right? Exclusive rights to host OpenAI's frontier models on Azure through 2032. And they have about an ownership stake worth 135 billion after the latest deal tweaks. I mean, every time businesses, developers want cutting edge AI, like powering Copilot in Office, GitHub, custom apps, they run it on Azure, driving massive cloud revenue growth. And Azure is already exploding thanks to AI demand, with huge jumps in recent quarters. And OpenAI's heavy spending there adds reliable, reoccurring cash flow. I mean, it's really, really nice opportunity here. And what I like about it even more is you have to think about the valuation. I mean, Google owns 33% and they're going to be IPOing at 1 trillion. I mean, if I pull up right now, they're a $3.4 trillion company. I mean, if they have a 27% stake in OpenAI and 135 billion is currently, you know, on the books right now, it's a massive tailwind for Microsoft, especially if OpenAI hits this $1 trillion IPO. I mean, Microsoft's chunk would be worth about 270 billion. And that's double what it's carried at on the books right now. And that would be a huge unrealized gain, or if they actually profit and sell, realized gain, right? And they got these exclusive rights to to run OpenAI's frontier models on Azure through 2032. So, every dollar OpenAI makes from AI usage is flowing straight through to Microsoft. It's like owning a big piece of the hottest AI rocket right now. I like it at this price. I think it is a very, very good, interesting time to buy. Now, with their investment, there's a lot of capital expenditures going on, right? I have this mapped out quarterly from December 2020 to September 2025. And, you can notice one thing: CapEx is growing at 28% a year. And that's all because of what's been going on since June of 2024. They've really started throwing down some serious money. And I think it's super bullish, right? It's all pouring into massive data centers, GPU, AI infrastructure to meet the exploding demand for Azure and cloud and AI services. And I think it's so bullish because those huge upfront investments build the capacity that unlocks massive revenue jumps later. I mean, right now it's pressuring margins a bit, but once the infrastructure is live, Azure growth accelerates, like the 30% surges we're seeing. It's because businesses are flocking to the extra AI power Microsoft can now offer. And history shows this pattern in tech is a winner, right? I mean, Amazon poured billions into AWS office data center years ago. Margins dipped short term, then revenue exploded as cloud adoption took off, turning it into a profit machine with very nice free cash flows. And it's the same with Microsoft today. And then, just to go off again on how impressive of a company it is, I mean, they have a rule of 40 alone off of their EBITDA margin. I mean, they have a 65% EBITDA margin, 18% revenue growth, and that's just super bullish, right? It's one of those rare mega caps that crushes it. I mean, the rule of 40, as you know, is it's any revenue plus any EBITDA or free cash flow measure as a margin, and adding together anything over 40 is super positive, right? And it kind of shows that the company's still growing fast but maintaining those rock solid profits. But historically speaking, the rule of 40, passers, people over that rule of 40, deliver killer long-term returns because that combo fuels compounding. I mean, think of it as like oil to the business, right? Revenues up and profitability's going. You're going to be skyrocketing. Conversely, revenues down, profitability's down, you're going bankrupt, right? I mean, let's just keep it simple and think about it like that. And why I think, people are getting worried about Gemini and are getting worried about ChatGPT's position relative to it, especially that they're, not solvent. I mean, we don't have the financials, so we can't see it, but I bet they're not solvent. Is that the return on invested capital, right? I mean, it just shows how excellent they are at making smart decisions with their money. Every dollar they're pouring into, research and development, capex, every dollar they're spending is returning a very, very solid return on capital. I mean, anything over 10 is excellent, right? I mean, if you made 10% returns a year, you'd be thrilled with yourself, right? That's what the SPY returns every year. I mean, 22.7. I mean, look how high some of these years were, 37.4, and they've never had a negative year of allocation. They know what to put their money into. So even if you don't trust it now, with ChatGPT and everything. I mean, look at the return on invested capital, and take some pride in how these guys run their company, and know where to put their money. Very, very impressive. And just the last one to show you, I kind of want to just show the growth rate in Azure, and I mean, look at this, 40%. That's so insane. And then look at the remaining performance obligations, right? Look how much it's ticked up. Look at it. Let me make it a little shorter to really, drive home the point. I mean, just alone, and this is quarterly. Let me just show you annually to really drive home the point. These are huge increases for a company, you know, this large. I mean, growing 28% a year in their performance obligations, and just going back to that first slide, it's a wonderful company at a fair price, trading. I got off of that slide, but it's trading at one of its lowest price to operating cash flow multiples of all time, and it is looking like a buy right now. Let me know what you guys think in the comments. That's all I have for you today. I'll see you in the next one.